Hey guys, what is up? It's Dusty here, and welcome back to another episode of the Daily Crypto News. And I still have this hay fever type of eyes. I still can't do anything about it. Having said that, 2500 XRP is up for the grabs. Link is down below if you want to enter the giveaway. It is very simple. There are a dozen links down here, and you can just use any one of them to enter into our giveaway. The more you do, the more entries that you get, and it's going to end in about 12 days from now, and 5 people are going to be winning. If you guys want more winners, still possible. If you guys want only one winner, it is still possible as well. Let me know in the comments down below, and make sure you press the like button. Having said that, I got that coconut oil right there. To get those palms rubbing together, I actually imported this oil from pretty far away. Little fun fact, really nice from my side. But the crypto market is pretty neutral today, right? It's not that juicy. It's not something I want to rub my hands for or do anything crazy because of. No. It's mostly because of what's about to happen. For all of you that do not know, Fed expected to hike interest rate again as crypto market falters. Now, this article is a little bit biased. Let's go to a couple of non-crypto type of articles. Fed to fight inflation with fastest rate hikes in decades. The Federal Reserve is poised this week to accelerate its most drastic steps in 3 decades to attack inflation by making it costlier to borrow. For a car, a home, a business deal, a credit card purchase, all of which will compound Americans' financial strains and likely weaken the economy. So for anybody that's not really familiar with macroeconomics, a very easy way to describe it is if you have massive inflation going on, things are getting more and more expensive. Why is that? Well, usually because things are doing good, things get more expensive. Let's say it like that. So what they're going to try to do to make the economy better most of the time is to kind of get that increasing in price going. Not necessarily trying to make everything go better, trying to make more production, more jobs and everything. And they do that by taking the interest rates down lower. In Europe right now, it's actually negative in a lot of places, which once it's negative, putting it down lower doesn't make any effect anymore. But let's say that they just keep putting it down lower and lower and lower, because usually that incentivizes borrowing, logically speaking, because things are getting cheaper. So what is the counter to that? If things are getting more expensive, what you want to do is you want less innovation. Well, that's actually the byproduct of what you're going to create, but you just want people to stop spending it as much, which is not optimal for economic growth, but it's more optimal to deal with these increasing prices and the value of your dollar basically deteriorating. Purchasing power, that is. So what happens is the interest rate goes up. And what happens then? If the interest rate goes up, actually borrowing the money becomes a lot more expensive. So let's say you are a bigger company and you want to invest in some bigger properties. Well, now to actually go do that, it's a lot costlier if the rate went from 2 to 6%, for example. All of a sudden, you have to pay 6% on that. If you want to buy a home, all of a sudden, you have to pay 6% interest a year instead of 2. If you are thinking of spending money, well, now you're getting 6% interest a year on your savings instead of 2. So you're more inclined to actually save money as well, which is one of the, I guess, easiest ways to describe this phenomenon. And apparently, this week, they're poised to accelerate its most drastic steps in 3 decades to attack inflation. It also reads the Fed will likely carry out another half-point rate hike at its next meeting in June, and possibly at the next one after that in July. Economists foresee still further rate hikes in the months to follow, and that was after its latest rate-setting meeting ends Wednesday. The Fed will almost certainly announce that it's raising its benchmark short-term interest rate by half a percentage point, the sharpest rate hike since 2000. CNBC also had a funny article about it. Here's how you can prepare if there's a half-point rate hike from the Fed, which is expected. Federal Reserve Chair Jerome Powell said the central bank is determining to bring down inflation more quickly, which will immediately send financial costs higher for many types of consumer and, I guess, just business borrowing. I'm not sure why they only say consumer. It depends. Here's what you can do now to lessen the impact on your outstanding loans. So it's a little bit of a hey, you're going to mostly get screwed up your butt a little bit. Here's how to ease it with a little bit of coconut oil. And once more, if you're wondering why, even though wage growth has been the best in decades, it's been outpaced by the increased household costs, said Greg McBride, chief financial analyst at Bankrate.com, which with inflation at a 40-year high, that has everybody concerned. And that's actually the most important part underlying. They gotta catch up, and baby steps are not going to help. Now, if you're wondering what will be the first sectors to jump when the interest rates rise, consumers will see short-term borrowing rates, particularly on credit cards, among the first to jump. Since most credit cards have a variable rate, there's a direct connection to the Fed's benchmark, so your annual percentage rate will increase with each move by the Fed, usually within a billing cycle or two. Adjustable rate mortgages and home equity lines of credit also, obviously, and you can understand which ones will follow the quickest. So what they're saying is pay down your debt and kind of balance for it. Find a better savings rate. Sometimes to be able to lock it is also a smart thing. But right now we're talking about what the impact of this is going to be on crypto, not exactly how to get better off of all of this. But I just wanted to get you in the loop just quickly. Well, since this is not an issue only in the US, it actually goes a lot further than that. The consequences are not going to only be in the US either. As of this point, what we've seen is an economic downturn a little bit. Why? Well, technically speaking, the growth is being deteriorated, I guess, by force here, by the Fed or any reserve, I guess, for that matter, because what they're trying to do is I shouldn't say what they're trying to do. What is happening is they're deteriorating all the innovation by the interest rate increase, and they can also be seen in the S&P, NASDAQ, and such. And until that moment comes where Bitcoin or any crypto for that matter takes over that inverse correlation to these stock indices, well, it's going to move down together with it. And the S&P is down about 1.4% today, NASDAQ about 0.8%. So it's logical that Bitcoin/crypto is kind of following that same faith. Now, I had an article here which talks about billionaire Ricardo Salinas that fires back at Warren Buffett's Bitcoin slander. I honestly think that this is quite an important article as well. I can notice this camera lagging so much. Wow. All right, no camera for a little bit. So, billionaire Ricardo Salinas fires back at Warren Buffett's Bitcoin slander. The reason this article is actually so important is mostly because you start to look a little bit further and thinking, why is Warren Buffett slandering Bitcoin? Why can he? What are the arguments against it? And how does it correlate to the story I just told you? Well, I honestly like to always describe the fact that Warren Buffett doesn't like it, the whole Bitcoin scenario, because it's against most of his industries. And billionaires and others can easily kind of bat him for it because, well, they want to gain from the industry, or they're more open towards it because they're less old or just not as susceptible to any destruction that Bitcoin or any crypto could cause to the financial system. They're less susceptible to it, which is why they keep laughing at them. How does it tie back into our story? Well, I think honestly that Warren Buffett, regardless of what happens in this interest rate scenario, will benefit from it. Why am I saying that? Well, because any bank can make more money whenever the interest rate increases. They can if they want to, and they can still prosper from that. Now, what is Warren Buffett heavily invested in? Just exactly that. The airlines industry is still going to prosper. Coca-Cola will still most likely prosper. Where exactly does Warren Buffett get hurt? Not anywhere, really. You're only going to hurt him if you really change the financial system, which he's basically thought and sort of made over the last 100 years or so that he's been alive, almost, if you guys get my drift. The man knows the economy in and out. He knows very well that some things can be a bust, it can be a bubble. He understands that very carefully. But what he also knows is that there's just a couple of things that can really take a lot of wealth away from him. One of them being a complete reform of the financial system, where, once more, that's, I think, one of the reasons why he's so hesitant towards it or so afraid of it, basically. Now, one thing I should tell you guys about is that there's two things I think we're doing pretty good on the channel. One thing is we keep calling out freaking gems that do really amazing. Now, if you guys are interested in all the stuff I'm going to talk about in just a second here, make sure you check out the link down below for Buybit. That's the exchange I use, but that's also what you're going to need for most of this stuff. So on Buybit, one thing I always do is buy into these launchpad sales, always, always, always. And as of this point, none of them have failed me thus far. I'm going to buy Ply, and I think it's going to be at least a 5xer. Not my financial advice, because I don't know for sure, but I honestly expect it to at least do well yet again, because all the projects that launched on here have done well so far. I know any past results are not a indication that the future is going to react in the same way, but I like my odds in that sense. And our Bitcoin trade was pretty beautiful. So what I described to you guys is I think the best point to open up a long position for Bitcoin would definitely have to be right here when we come back into this demand zone. I think I told you guys this about 2 days ago when we were seeing this red candle inside. And right now we bounced beautifully all the way towards our supply zone for Bitcoin before falling back down. And again, that's the flip we literally wanted to make. So as long as you are not taking this a little bit too dedicatedly, which means that you, for example, only sell it once it's at the middle of this supply zone here, but you actually exit positions a little prematurely just below any zone like that, and you try to open the moment you get some confirmation on a shorter term. Once it's actually above there already, you have a little bit less margin, but usually it's a little bit more safe. But that beautifully worked out as well. As I basically described, we have had a rejection on the EMA ribbons, have fallen below our little supply zone at the time for Bitcoin, fallen all the way towards the next closest supply zone, which is right here, or actually this is the demand zone for Bitcoin. And right now, again, we bounced off of there because that's where a lot of the bulls were residing. And here is where a lot of the bears were residing, which is why it fell back down. Right now, we're playing ping pong until one of these levels is broken. We're going to have to see how that plays out over the next couple of days. But the interest rate and all that stuff, short term, most likely not so good for crypto. And we have decisions coming up over today, tomorrow, and Wednesday. So not too excited about it, guys. But medium term, Bitcoin, any one of these cryptos might actually kind of step up and show the inverse correlation. But as long as it's not, that's most likely why the crypto market is moving on right now. It's the most important thing in the financial realm for the next couple of days, I think.